Need to understand two important things. The market basically does only two things. It's either going to be consolidating or trending. And I would almost say that the market is always trending, meaning the market is always pushing up or the down, just depending on the time frame. Because if we are looking at this particular structure, we are pushing to the downside, right? In this time period, the market has been pretty much stalling within a range. But if we going to the lower time frame, we're gonna see that all these smaller pushes, we can actually see that this is another entire trend structure to the upside on its own. Now, if we're gonna plot the indicators or if we're gonna follow this structure to the T, we will have a bunch of different market structures all day long. And basically, more you are going into the detail, basically what is the valid break of the structure, things like that, you will get into what I like to call the structure rabbit hole. For instance, if we take this high as a major high, we have another low right here. So if we following the break of the structure, it's gonna be right here. So we will have the structure basically this thing. And now if we just following the structure, how it's developing, and we will be following basically highs and the lows, swing highs and the lows, we will eventually having a bunch of different structures. And as you can see, this alone is going to be really confusing if you will focus on solely this particular thing. So you can think of it as a rule of thumb. If you get this really choppy market structure, I would just recommend to using the higher time frame, because if we use the higher time frame, now the market structure is gonna be much more favorable, which basically leads to one of the most important thing is if you decide to trading the structure, I would highly recommend to focusing on one particular time frame or basically one particular structure, and don't adding additional top-down analysis, because you will, especially if you don't fully understand the market structure, it's gonna be very overwhelming and you will make more likely a better decision if you just remove all the noise. So my very first tip is basically focus on one particular time frame. As you get good at identifying the structure, you can add your additional lower time frame structure for, extra confluence or the confirmation if you want to have that extra precision, but also at the same time if you already having some system in mind. Just for the example, let's say that this is the entire bearish structure on the higher time frame. So as long as we gotta be focusing on basically these levels, we gotta be fine. But it also give us a huge range basically where we can execute the trade in order to basically catch the continuation to the downside. I totally understand that what you're actually seeing here, basically having like 50 pips stop loss, things like that, is a little bit unappealing. But I could almost argue if you just focusing on this a little bit bigger picture, you're gonna do much better than 99 if not like 100% people who are on the social media. And honestly, it's nothing wrong with that. If you can literally identify a good trend or good structure and you can catch 2-3 trades even a month, you still outperforming literally almost everyone. And again, beauty as you get good at what you're doing, then we can talk about adding additional layer of that lower time frame structure. And with the particular plan, let's say this is gonna be really important liquidity level, maybe this is gonna be support and resistance on the higher time frame, could be also imbalance on the daily, things like that. Let's say this is a really important significant level, then if we going here and just following the market structure, we will have this push to the upside, pullback, breaking the structure again, and now we're having this change of the character. I actually gonna get into this later on, but I feel like it's really important to mention basically which direction you should go at first before we start going into a little bit more depth. And once you have this potential reversal, well, then you can basically take the trade with much smaller stop loss and refining your entry. But like I said, focus on one particular time frame, the high time frame, until you fully master it. When it comes to the market structure, I highly recommend to focusing on basically 3-point method. That's how I like to call it. The 3-point method is basically you gonna be focusing on 3 particular points. So let's go right here. what we having is basically we having some major high, we pushing price to the downside, and because we pushing price to the downside, this is gonna be a significant level because we did not trade anywhere above basically this high, so this is the significant extreme high. And because this is our extreme high, we're gonna highlight it for the future reference, because if we happen to continue in the bullish direction, we should break this high. As soon as we break it, we basically having this second point of the market structure. I like to call it the second point because until this level is broken, we don't know what is going to be our basically middle point. Once we having the break of the structure, you can basically mark or basically highlight and see which basically low, in this case it's the lowest point, and it's clearly that it's this one. That's why I basically call it 3-point method, because every particular structure is contained by 3 points. Now if we happen to continue with the structure, we either gonna continue to the upside to basically extend this point, or we're gonna pull back and then we'll see if we're gonna break the high or the low, and the structure is gonna repeat over and over. I think now it's a great time to explain what is the valid and invalid break of this structure, at least to my interpretation. Since I explained this is the 3-point method, we could also say that this was another 3-point right here, because we had this high, we pushing price lower, and then eventually we break the highs right here. And because we pushing price to the downside, you could actually argue and you could tell me that we had the break of the structure right here, which would be actually a really valid argument, because a lot of people also considering wick as a break of the structure. To my likings and to my personal preference, I do not like to use the break of the structure as a wick, because what is the wick? The wick on the lower time frame is basically push to the downside and stronger push to the upside, depending how the candle gonna close. Usually it's also a good sign that we potentially reverse from that level. We don't have to reverse, we can also basically continue with some pullback and then continue to the downside, which in a lot of cases can be happening. Now if we flip the scenario and focusing on the upper side, we're actually seeing that we technically break the structure to the upside as well. But as you can see, we could basically continue to the downside at this point because there was a significant selling pressure on this level. If we want to continue a bullish trend and we want to basically having this extra confirmation, I need to focusing on a strong body closure basically through the level. So as soon as we print this bullish candle, which is the white candle, then I have the confirmation that we will have the bullish basically structure. And even though we had 2 consecutive pushes to the downside, and this seems to be rather scary, as you can see, we having much different reaction and continue to the upside rather than basically this break of the structure by the wick. So again, do your own diligence, but my rule of thumb is focusing on body candle. I think now is the great time to also introduce the change of the character CHoCH. You usually having the break of the structure, so as we breaking to the upside, we are basically having the break of the structure BoS. You could think of BoS as a basically continuation of the trend, whether it's bullish or bearish. The change of the character comes into the place when we finally breaking that bullish trend structure to basically this particular low. If we breaking this low, basically that third point of the 3-point method, and we basically closing below, this is technically break of the structure, but we call it a CHoCH because it's the change of the character, meaning because the trend kept continue pushing price higher, now it's no longer continue in the same direction, and that could eventually lead to potential reversal in the market. Again, it's also really important to mention that this does not have to happen all the time. A lot of times you're gonna see basically continuation to the upside, which in hindsight you will probably discover there's been some really significant point of the interest, POY imbalance in the market, or maybe the higher time frame seems to be a little bit more bullish. But if we have enough confluence, a lot of time you're gonna see that we will pulling back to wherever we having here unmitigated, and then we pushing price to the upside, to the downside. If we're gonna be following this example, we having 3 points. if we happen to having the change of the character, to my understanding again, we would need to trade all the way down to break this level to having the change of the character. If that would be the case, I would be looking and expecting that we could continue to the downside. There would be my change of the character, okay? Let's say we're gonna mark this low, and if we happen to basically trade through the level and just having the body candle above the specific low, and we will print another wick and continue to the upside, we could almost anticipate that this is gonna be a very similar price action. Now when you're watching this video, maybe you could say, why didn't you choose basically this structure, right? Because we are trending to the upside, we break it here, we're having the pullback and continue to the upside, which to be fair, I would say that's also correct, because technically if we're gonna be following this structure based on basically the candles, this would be a valid swing point because we have 2 consecutive or 3 candles before we having, you know, this high to be printed. But personally, I find it very confusing because you will get into that structure rabbit hole what I was mentioning before. Kind of rule of thumb is to give a little bit time for the structure, for the candles to, let's say, breathe, because we already having this high, we already having this low, and we having this particular range. In this scenario, in this case scenario, this is basically the low that maintaining that bullish structure. I like to call it MP, maintaining point, because that's usually that true low or the highs, whatever you want to call it. If you don't want to get confused, maybe you can draw the box, and until you will get extra additional, you know, push to the upside, that's gonna be like really visually clear to you, just focus on this particular low. Because now if I fast forward, we can actually see that if we would follow this structure that we talked about before, now we're having this change of the character, and based on the change of the character or the logic change of the character, this would be potential reversal, right? So you would expect that this pullback with the wick would be actually a really great significant area. You can actually see that, like, by this logic, now actually this piece of price action looks rather bearish. And so just delete all of this and let's add some, you know, extra confluence. We having the sweep right here. Now the entire structure looks much more bearish, right? And I think this is like one of the biggest trap that people do when it comes to trading the structure, because they are really narrowing down the vision. But again, if we're gonna be focusing on what I just said, and if we're gonna focusing on the maintaining point, and for instance using the previous video where I explained some trading framework, we could be focusing entering the trades basically below the 50% level. Just the very same structure would actually give you or make you some money. Just a quick recap, focus on the bigger picture, because sometimes the bigger picture is much more cleaner. And again, rule of thumb, if you cannot see the structure visually or find it really confusing, zoom out and see the bigger picture, because I can almost guarantee that if you're gonna be focusing on basically the bigger picture, you will avoid a lot of dumb trades. And trust me, you don't need to trade every single day as long as you have some bulletproof trading system.